Yeah, because and for my birthday gift, my 50, I want to do that. But I was just telling this, I think he found me the solution to email and see if somebody wants to sell something.
It won't be an email. Post it.
Post it online.
Like I know one girl that might sell her. She. So it's like, I'll just.
Sold out and I bought some race chicken. Yeah.
I can't bring it back.
Hi, everybody. I think Sean's using the bathroom, so he's going to be our host again today. But I'm going to get us started. And I'm going to start with. We do. Okay, let's do some bucket fills while we're waiting for Sean. Oh, here he is.
Rusty.
What?
Slide.
Oh, okay. All right. Fill Allison's bucket. It's a birthday.
Spade.
I love a little glitter. I know. I thought you might like that. Okay, let's sing to Allison. It's her birthday today. Wait, bestie. Wait, is birthday bestie. They have the same birthday. And I talked to him yesterday and said how much fun it was going to be a team meeting to learn all about agent financials. And he was like, I might be busy. Okay, he's busy. Let's sing to Allison. We're gonna sing to you. All right. Happy birthday to you. Happy birthday to you. Happy birthday. I'm so grateful that I'm here. We have family. We talk about it all the time. We're like a family. Well, we love you. I hope you have the best birthday. Oh, thanks. Happy birthday. And then one other quick thing I want to fill Bradley's bucket. He is getting married. So grab a cupcake, send him some well wishes or some fun date night ideas. And we did do a little honeymoon fund, no pressure, but if anyone wants to put anything in it, they are welcome to do that and sign the back of the little box. So that's all I have, Sean. Over to you.
What other bucket fills do we have?
Bradley's stuff is all back here, right? If anybody wanted to do it. Yep, it's just in the back of the room.
And if you haven't filled out a date card idea for them and whoever else wants to look at them, fill one out, please.
I have one.
You have an, is it going to get a haircut?
No, it's just for you guys and making me a surprise man party.
We were kicking around some bachelor party ideas and we got shut down, right, Chris?
Yeah. It's a little celebration at the office. I guarantee Bradley's.
Awesome. All right, what other bucket fills we got? Let's go one more. Who's got one more? Besides Rusty. She's already given too many. Chris.
I got a bucket full. What? Jesse Tolman, who literally after last week's financial training came in and responded to some of it and made a couple of changes and we talked about it. And that's I think that's how it should work, right?
Awesome.
I finally went and put together a business bank account.
5 years. Awesome. Okay, back to Rusty. No, you can't. You can't have it.
More bucket.
Oh, hi, Kathy.
Kathy, many of you have heard me talk about a friend I've had for a long time, and she's always been an inspiration to me. And she and I used to do script practice in the mornings together. And I've told you guys, like, we call, we'd be like, hi, how are you? And we get right to it. And so Kathy has always been such a good friend, and I'm so happy she's here today.
Okay, awesome.
I have two. I have one for you, cause you will call back at any time, even in Hawaii. I really appreciate you so much, and then, you know, go over all the deal stuff that I have. And then Justin, he calls and checks on you if you haven't seen you in a few weeks, so thank you. I both of you.
He's been writing that date card for a while. Oh, I think he's got two.
I'm told since I don't have dates, I have to go.
He's a master dater. He's a master dater. He's got figured out. Okay, any other bucket bills? We'll move on. Okay, so what we have coming up. So today, actually,
Yeah, it is.
we have something that's going on today, right after team meeting. What is that? Yay, that's not on here, but that is. Oh. Oh, why wouldn't that be the first one since it's gonna be first? So then we also have Tech Bar with Bradley. And you can ask him where he got his haircut, and I'm gonna keep teasing him about it. Okay, and then tomorrow we have, what do we have, Allison?
Contracts class.
Contracts class, and we're so excited for it. So, I know
We really are.
the more people that come and ask questions during this class, the more realistic it is to real life, and that's how we want it to be, okay? We don't want it to be boring and dry, which I don't think we do anything boring and dry for the most part, but
And
you
we're
never
writing
know.
contracts of the moment, like what
Yep.
the market is doing now, we're showing you how contracts are being written now.
Yep, exactly. And then on Thursday, we have the office closed from 9:30 to 1:30. And on Thursday, we have but also we have and that's why the office is gonna be closed. We have the behind the build, and that is gonna be at NWAR. Does anyone not know where NWAR is? Does anyone not admit they don't know where NWAR is?
But we find it.
It's actually super easy to find. It's right next door to our old office location, and come a little early if you will, because we're expecting a ton of people. What did you say earlier? We had almost 50 people signed up,
We're at like 60.
plus all the builders that are gonna be there and so on. It's gonna be a little busy area, so come a little early if you don't mind. And then Friday at 10, we have the Pathway to Production that is gonna be via Zoom. And then we have the 12 to 1 accountability group, and that is going to be in the training room, right? So, and then we also have no team meeting next week. I don't remember why.
Spring break. And we're
Uh-oh.
going to build events, we already have 2 events this week.
Some of us are gonna be breaking for spring. Okay, keep calm and Canva on. So has anyone jumped in and started doing the Canva stuff?
Yes.
It's awesome. It's some great stuff in there. I'm definitely not an expert, but I know the people that are. So register there to join that class. I see a few phones up.
Sorry. And
Everyone
this is
get it?
via Zoom as a reminder. Yes.
Everyone's got
Come
it?
into
Okay.
that and then come into contact.
So this is to add to that list. And the reason why we want to do a head count is because we want to make sure we have enough food for everyone. We've removed some of the duplicates. So if you have signed up twice, if you signed up again, we'll remove you again. But if you're not registered, get signed up. Okay, and then we have Your Big Life powered by Your Big Business, and this is going to be an awesome class. And so you sign up. This is going to actually be in person, so we're super excited that he's coming here. He's going to be down, not here. He's coming to Slick. You guys have all been to that Slick. It's actually pretty slick. The place, getting there and getting off the freeway and getting back on.
As long as it doesn't snow.
Let's knock on wood. 'Cause you never know. I know it's crazy. Like I think we're all done with winter, even though we really shouldn't be, but we're over it. Mother Nature is trying her best. Okay, anyone else need to sign up before I move on? Okay. I'll go back. We got all day. Yeah, you just gotta stuff eggs twice as fast. Got it? Okay. We have the Real Systems Lab. This is the AR stuff, the AI stuff. This is the class that Shoney's doing. And if you guys have not embraced or started to embrace AI, we're missing the boat. We're absolutely missing the boat. It is super helpful. And just for the record, when you guys post something, not just you guys, but when people post something, you can clearly tell it's AI. At least I feel like I'm like, that's not real, but it's pretty cool. Anyway, so anyone? Yeah.
using it right.
Well, like a friend, well, I can't even speak. A friend sent me their picture and they were like, hey, do you like my new real estate picture? And I'm like, yeah, bro, it's not even you. Like us old people used to call that glamour shots. Do you guys remember that? All the old people are laughing, all the young people are like, what are you talking about? Anyway, that's AI, it's a new version of glamour shots. Yeah, so rookie real estate agent workshop. Okay, so you were gonna say something about it?
So the rookie real estate agent book came out last year. And it's really about building the foundations in your business to get to $100,000 and building the systems behind that. So we're gonna do a workshop on that on April 16th. That will get your business set up for success.
How many people have read this book? Looks like more people need to read it.
So also, this to me is such a critical piece, and I'm gonna just throw it out there that if you got your license between 2019 and 2022, you probably did a really great job, and you had some momentum within the market that was pushing your business forward, and chances are you got really busy. You probably didn't build all of your foundations.
It was easy to get sloppy.
It
when
was
we're
easy
too
to get a little bit
busy.
sloppier. So I'm just gonna suggest that if your business is not where you currently want it to be, this is probably a good day for you to spend some time, like actually just building your foundational pieces of your business.
Well, and I don't think it, even though it says rookie, I think everyone should read it because it's probably going to bring us back to the stuff that we probably learned over the years and remind us of the habits that we should have. Because if we all had the habits that we're supposed to be doing, right, it would be just a different world for sure.
Well, like real estate is so complex, and I think this really helps us simplify our foundations, and then you can get creative. Like, let's go back and really build those foundational models like we're taught, and then get creative in there.
Yeah, awesome. Okay, conversational frameworks. That is Tuesdays and Thursdays, 9:30. We usually do it right here
And we'll
live.
start doing it on Zoom as well, but you're gonna get more out of it in person. But I don't want it to be like some people are saying that they can't come in person.
I've sat in and done it quite a few times, and I have Big Tony that comes, Marcos comes pretty regularly, and it's better the more people that come because the questions that we ask is like, okay, what are the conversations you're currently having? And Big Tony will say, well, I met someone just give me an example. I met someone at an open house, but they said this, this, and this. How should my follow-up be, right? So it's like real life scenarios that we're role playing. It's not just we're reading off a script, right? But everything we say and do over time and we duplicate it is a what? It's a script. We all have scripts. So the better you internalize them and learn them, the more they become yours, which then makes you feel like you're having more of a natural conversation. And if you're having a natural conversation versus a scripted one, what does the consumer do? They feel more comfortable, right? So come and practice. If you're not practicing here, who are you practicing with? You're practicing on your clients, which is, yeah. Yeah. Yep. And I promise it doesn't hurt. Have you ever bled during that? Were you ever in pain?
Well, not from calling.
But were you ever uncomfortable?
Yes.
Probably a couple times, right? Because you're learning, right? So it's good. Okay. We already did a lot of this, but do we want to recover the ones that people wrote down?
If anybody wants to talk about, there's Catherine's online, but she has a Roy patio home. It's a 3-bed, 2-bath, 3-car garage. It was built in 2020. There's no HOA, which is awesome. Only $475. Like, that's a great deal. So if you have people looking for a patio home, that's a good one. Stephanie, tell us about yours.
West Point Super Cube, built in 2023.
Super cute.
Super cute. It's a horse property. So if you know anybody looking for horse property, a little over a half acre. We get pictures today. It'll go up tomorrow. Yeah. So, and it's off of, it's not on like the main street. It's got its own driveway back and behind it. And then Washington Terrace, we just reduced that to $395. That one's really cute. It has the master suite downstairs, bathroom, new shower thanks to Sean and his crew. The kitchen's new. It's a gorgeous house. So bring some buyers.
Awesome.
You didn't say super cute.
Oh, that one's super cute. That one's so clean. She does have a lot of stuff in it, but that one's so clean.
So, talking about clean, the one in Sullivan is pretty clean. It's, 1903, 4, trying to remember. Anyways, early 1900s. But it's an adorable little house, where my family 7-Eleven used to be down the street there. It's really not got many neighbors. It's kind of in like a little wooded area. It's fun. It's a fun property. And then we're listed pretty comparable at 305. You wanna share anything else? Matt? You have a little kid like mine, he'll love it.
Is it in that like goalie with all the scrub oak and stuff?
Yeah.
Oh, that's awesome.
Yeah, right down that curve.
Yeah.
Yep. And then, my Liberty one, 4 beds, 3 bathrooms, 3 full bathrooms, 2 half bathrooms, 4,400 square feet. It has, somebody during the open house mentioned, making a hot yoga studio out of that living room with all the
Hell
three,
yeah.
the 270 view windows. I was like, it already has a mini split in there, so you can actually do that without any modification. Almost an acre. It looks like an acre, honestly. Like a newer kitchen that's absolutely to die for. Enough solar to power 2 Teslas a day and an EV charger. And 2 batteries. Apparently it's very impressed by that. But he loves it. We talk about it all the time. Yeah, we're listed at 1.125. And then solar paid off. Beautiful. Thank you. And solar's gonna be paid off. Solar's, yeah, already paid off. Yep.
Awesome. Who else has new listings that we want to talk about? Hunter, first live listing.
Congrats.
Tell us about it.
3-bed, 2-bath patio home with the loft upstairs. I counted it as bedroom because it's got a closet and window.
Okay.
Single level patio. Oh, you already wrote that down. It's still got builder warranties, 8 years left, 8.5 years left. And from what I've read, they're transferable.
Hey, what area
West Point,
and what's the price?
$545.
Beautiful picture, by the way,
Awesome.
and the details that you put everything, you didn't miss anything on it.
I tried that for like.
I think shows you didn't miss, usually when it's your first listing, I looked, it's spot on.
Hey, who else? Wes.
Got one in North Ogden, it's a 6-bedroom, 3-bath. 35, a little over 3,500 square feet. On Lakeview Drive, price is $675.
I saw the pictures of that one too. It looks beautiful.
Thank you.
It's really cute. Nice.
Justin.
I have a listing coming, probably in like 2 weeks in West Jordan. 5-bedroom, 3-bathroom. Super upscale neighborhood in West Jordan, has like a private pool for like the 20 homes that are in there, and the HOA is only $60. It'll be listed at like 1.2. Has solar, and it's a beautiful house. And then I have 2 lots in West Point, like 1/3 of an acre. The builder wants to build it, but he'd be open to selling them for like $250.
If he does a build job with it, what's his price range is? I know that's like a loaded question, but does he have like a range that he's building?
I didn't get that far with him, so you can find out.
Yeah.
I have another one in Ogden. It's on 9th Street. It's 3-bedroom, 2-bath. It's gonna be listed at $379 going live on Thursday.
One more.
One more.
One more? Yep. Roy. It is under contract accepting backup offers. However, the buyers are having a hard time getting financing. So if you have a buyer, it's really cute. It has, the split entry. It has the 2-car garage, 4 bedrooms, 2 baths, unfinished family room and bathroom downstairs. Has a pool and the chicken coop and the sheds and yeah, all the fun things.
You know who likes chickens?
Cool, chicken and chicken, so fun.
A pole and chickens, that's a good combo. Good
Not
thing they're not done.
anymore.
Oh, please, I don't remember the price off the top of my head, $4.55. Great price.
Okay, anybody else?
I have two I mentioned last week. They're right off 12th Street, Marriott Slaterville, but you would think it's Ogden, 'cause it's by IRS. Two townhomes, one's gonna be 315, one's gonna be 319. They're 3 beds, 2.5 baths. I'm gonna walk through one tonight because it's gonna be finished.
315 and 319.
Yeah,
they're
the
brand
one,
new?
they're both, they're not brand new, but they're
Oh, okay.
newly remodeled.
Okay.
The one is getting its railings put in today.
Awesome. Okay, anybody else? Bradley, is there anybody online?
Nope.
Okay,
Or
Yes.
Blaine has a mobile home going live tomorrow. 3 beds, 2 baths. It's 195 and almost 1,500 square feet. He's got his North Ogden listing. That's 1.4 million. 7 bed, 5 bath with full ADU in the basement. 1/3 of an acre and 6,700 square feet.
the big one.
And then he's got a West Haven townhome, 3 bed, 3 bath. Listed at 370 and it's 1,600 square feet. And the Lee is looking for under 350 in a good part of Ogden with a fence viewer.
Where's a good part of Ogden?
Neighborhood. All subjective.
I live in a good part of Ogden.
Do you want to under 3.2 for under 350 with a fence shirt?
He did not say better bath.
Okay, just a fence shirt. Okay, got it. I feel like we just talked about one.
I was thinking we did
Sullivan
too.
under 350. That's all I got.
Okay, so have you guys noticed, what's been happening in the market? You see how full our board is?
So many, multiple offers.
Yeah, the market is what? It's picking up. Did you notice the days on market has dropped almost 20 days? Just in the last like little while? I think it's gonna continue picking up speed, right? We just need interest rates to continue to come down a little bit. We need to stop bombing other countries and stuff, because I'm sure that takes an effect on it, but I think we're heading the right direction. So we just gotta keep that in mind, that the days on market is getting shorter. So what is one of the most important things to do when the market gets with shorter days? Price appropriately, right?
Like I said, I did 2 open houses on Saturday and had just over 30 groups come through.
Oh, wow.
Hey, what?
You didn't say people, you guys, he said groups.
Between the two, about 30 groups. to make of them. And
Why are we not hosting open house?
each one I probably picked up 4 new buyer leads.
Wow,
Love it.
that's like a whole summer's worth of business right there. Yeah. So if you want to host an open house, let Mikhail do it. 'Cause-
Both, so 8 leads.
Yeah.
So he has 8 leads, times an average commission in our office of 12,500, which his is probably more than that. That's $100,000 in a pipeline in 1 weekend.
That takes an hour. That's a bit.
Another contract that I've met too.
You guys, the buyer under contract.
And he spent like 2 months out of the country.
That's what we need to do.
Yeah,
All right.
yeah.
I need
Okay,
blue eyes.
awesome. Dark skin and blue eye, that's what it is. Yeah. Okay, we gotta roll. Oh, sorry, we're taking too long. What do? We do all our calls in a TCPA compliant way, please and thank you. You're gonna love this, that we constantly remind you if you get the call. Okay. So my two favorite people are getting to speak today, and Jolzy and Russ. Erica will down with it. It's gonna happen.
Remember, if you didn't download the participant guide, or if you were not here last time for part 1, the participant guide is right here in the QR code. There is 112 pages. It is actually really great content. So, I'm gonna encourage you to download that. you have not yet. And then we're gonna cruise through the first few because we have a couple that we didn't get to last time.
Yep,
We're gonna hustle.
you ready?
We were born ready, Chris. It won't let you download it? Well, do the empty card.
Yeah, maybe give them.
It'll take you to the Google.
Moving on. You ready?
Yes.
Go. Okay. Couple questions real quick before we jump into this portion of it. This is stuff from last week. But by way of recap, okay, I want you guys to think really hard about these questions. Who in this room is a business owner?
Everybody's.
Better see everybody's hand, or seriously, it's gonna be a problem.
He's
Okay.
gonna be knocking on your door.
Everybody's a business owner, and as business owners, what do we do with our financials?
Take them seriously.
Take them seriously, right? We watch them, we report them, we maintain them, we look at them, we
We have
make decisions off of, them, right? Okay, so that's a recap. If you learn nothing else, take that away. And if you don't know what to do after walking out of this class, come visit with me, Russie, or any of the staff, and we'll just go from there.
Either CPAs or tax accountants or anything like that, or IRS, employees, we're
I
not.
like to pretend to be
You
one of
know,
the
we give a lot of advice. Some of it's realistic, some of it we make up, we don't know.
Yeah.
Just kidding, we really don't, but all of this, if nothing else, should spur you to have a conversation with your accounting professionals, okay? That's the whole idea of this. There's a lot of things that we're talking about. This is not just go do it yourself or kind of stuff, right? Like this is have a professional that goes and helps you plan for your future financial.
Yep. Okay, so we're gonna talk real quick about the different types of business entities. Typically, when we get a new agent in the office, one of the first questions we get is, what should I do about, like, do I need to create a company? And right? And there's a lot of uncertainty about how to proceed with that, okay? Most of our agents, this is a generalization, but most of our agents just sort of start out as a sole proprietorship, okay? Who knows what that means?
It's you.
Just you, right? Do you get any tax protections with a sole proprietorship? Nothing's protected, right? And in a sole proprietorship, you may be commingling funds, right? Business funds and personal funds. We hope not, because we've been talking about not doing that. But at the end of the day, it's essentially just you, and you're liable and accountable for everything that happens in your business, okay? What about a partnership? Anybody know? So partnership is two or more people, right? With equal ownership and equal responsibility for everything.
And people like.
Correct.
And what?
Equal liability. Okay. The third one on here is where a lot of our agents go at sort of a point in time when their business starts growing, right? Jesse, I'm gonna pick on you a little bit. Jesse and I just had this conversation. She's got an LLC, right? Tell me a little bit about that. Why'd you create an LLC?
Well, I had a really good year and needed some tax expense sheltering.
Okay,
Yes, and so after talking with my tax person, they said that they set it all up for me. And helped me use that as a way to like segregate my finances in a way that helps reduce my.
yep, you use all kinds of great buzzwords in there. So there's basically, there's tax protection in there, right? There's liability protection in there. You don't commingle funds, definitely, when you're an LLC, right? You run everything sort of separate, okay? Again, this is a really simple approach that a lot of our agents go to. When you start getting into the corporation, the next one, it sort of takes that to a whole nother level. And you start dealing with a lot of layers of bureaucracy, there's boards, there's all kinds of things that have to be part of that structure in order for you to comply with laws, basically. So,
Quick, on an LLC,
Yeah.
I just want to mention too.
please,
Your accountant's gonna advise you, part of, as an LLC, you can actually choose to be taxed as a
thank you.
sole proprietor or as a corporation. So a lot of times people will say, oh, I'm an S corp. you're actually a limited liability corporation being taxed as an S corp,
Right.
right? So again, make sure you're talking to someone. In my opinion, this is not like a take your taxes to H&R Block type of a business that you own, right? This is a get a professional that understands self-employed, limited liability corporations, S corps, how they should be taxing. Make sure you're talking to the right professional. Not all accounts are created equally, okay?
I love that. That's some of the best advice you're gonna get is consult with your experts. You might remember that last week we talked about your list of experts that you need to have. This is where they come to play. Rusty, do you need this?
Am I up?
You are so up right here.
Oh, yeah.
Yeah.
One just quick thing, there is differences of corporations and S corp or C corp. And again, just remember, talk to your tax accountant, right? And a lot of it's gonna have to do with how much money or income that you made, how they're gonna have you file the tax, okay? So speaking of taxes, gosh, is this everybody's favorite subject? I was like, boy, how could we have a more exciting team meeting than taxes? That is really sexy stuff we're talking about. Here's the one thing that I started looking at taxes a little bit differently, actually. The first year that I had, my accountant said, oh, we gotta do some stuff. So we're gonna spend some money. You've gotta go backwards. Like the good news is if you have a good accountant, you can actually, there's things that you can change in the current year to affect the year that you just had. But I remember first going into a state of like, oh my gosh, I can't believe I've been paying my quarterlies. It was the first time that I way underpaid my quarterlies because I had a really good year. And I remember my first thought was like, I wanted to throw open the garbage can and maybe I wanted to cry a little bit. But then I got in my car and I just put a different perspective before I even called my husband because I knew that that was going to be a conversation. And I was just like, you know what? Like, what a privilege that I made enough money that this is a problem. Like, this is a good problem to have. And so I started looking at taxes a little bit differently at that point. And I started kind of thinking, well, how can we pay like a fair share, but less than what this number says? Like, what are the things that you can do as a business owner? So we're going to talk through a couple of those things. By the way, speaking of taxes, and again, this is just some advice that you may want to talk to your accountant about. They're likely going to have you pay quarterly taxes. Now, again, depending on what you choose and what your conversation with your accountant is, you may do things like I do some stuff monthly that they take care of for me in a payroll type situation, but there's going to be some things like this. If you're paying quarterly taxes, remember that your taxes aren't due once a year like everyone else, right? You have quarterly due dates. So those are April 15th, June 15th, September 15th, and January 15th. So these are your quarterly taxes. Also, as a business, who can tell me when your like actual tax return for the year is due? Is it April 15th like everyone else? It's March 15th, unless you extend. Then you can go till September. But by the way, if you don't pay these, there are fees and taxes and penalties, okay? So keep that in mind. You want to make sure you're saving for your quarterly taxes. The hardest thing in the world to understand is income taxes. And that was from Albert Einstein, right? And he's a pretty smart guy, and he's even saying like, this is really stupid. So ultimately, what you're going to try to do when you're figuring out your quarterly taxes, you're going to have some different taxes. So you're going to have income tax. That's federal, state, and local taxes. That's based on your income. You're going to have some self-employment tax. You're going to have some employment tax if you have employees, or if you're paying yourself a salary, right? So why would you have self-employment tax? Does everybody know what self-employment tax covers? Trivia for you. Jesse?
Your contribution for social security.
Right, other the contribution for social security, unemployment, all those pieces, because those are not being taken out of your check. So has everyone gotten a paycheck yet in the room? I think everybody, mostly. A couple people are new. So when you get your paycheck, the entire amount of the check that comes to you is actually gross income. Like we take your splits out for the brokerage, but we don't pay your taxes. So you have to pay your taxes out of that money. We talked about that last week with Chris, right? So you want to make sure that you're saving for those things and talking to the right professionals on what you need to do. So for example, for Jim, if his profit goal is $140,000 a month, a year, it's $140,000 for the year. He is going to, that's a monthly amount of $11,667 is Jim's monthly salary. So Jim in his tax bracket has decided that he should save about 40% for taxes, which is $4,667. Does that require a little bit of discipline on Jim's part?
Yeah.
for sure, right? And maybe Jim's gonna do some things at the end of the year that make his tax liability not quite 40%. Maybe he's gonna buy something, maybe there's gonna be some other things here, but he's saving for this amount regardless. Now, is Jim in a better position to save too much money versus not enough money? Right? If Jim pays too much money, let's say Jim estimates and he pays too much money every quarter, what happens to Jim?
It's a refund.
He gets money back. That's his tax refund, right? What happens if Jim doesn't pay enough and he underpays his taxes and he has to pay more once he files?
Owes the IRS money.
He owes the IRS, and by the way, there's penalties in addition to that, right? Because you didn't pay enough on time. So the IRS is gonna actually say, hey, you didn't pay us enough, so we're gonna penalize you. So that means every month, Jim has about $7,000 left over for personal expenses. So I want you to think about it. We're not gonna actually do the activity today, but there is a little activity that you can make a note of. And just think about if you wanted to pay yourself a monthly salary, what would that look like? So for easy numbers, if you wanted to have an annual salary or a monthly salary of $10,000 a month, that's just, I'm gonna use easy numbers because that's the easiest. 40% of that would be $4,000, which would mean $6,000 was what you could spend that month, right? So think that through. So you're gonna do a little activity later, not today, because we do have a little bit of, we got a lot of stuff to cover today.
We do.
So this is giving you some ideas. Chris, do you want to pass out those things we have?
Yep.
So Chris and I, there's just a couple things in here that you're going to have throughout this exercise and a couple of others. But I want us, when we're thinking about personal versus business expenses, I want you to be thinking about what's a personal expense, a business expense, or both. So this gives you a little bit of an idea. Now, a deduction and a credit. So the difference between a deduction and a credit is that a deduction reduces your taxable income, so you pay less tax. A credit actually directly reduces a tax owed, so you pay less tax either way. Credits are benefits that are offered from the IRS or your state or local governments, and you can review those with your tax accountant. Those change from time to time. Deductions are actually your legitimate business expenses. Now, I did say legitimate business expenses. So I'm just going to run through a couple of these accounts. So for example, your accountant fee, there's probably going to be both, right? Every year, a portion of what I pay for our accountant and for my financial planner, my advisor, part of it is a business expense, part of it is a personal expense. This is saying it's all business, but it kind of depends on how you break that up.
Great, can you get one?
We'll
We
probably
don't
need to
have any more up here.
Can you
Bradley or
take
Vince,
one
do you
and
mind
print it?
making a copy?
There should be one right here without statement.
Oh, you got it.
They got it. Got it.
You got it? Okay.
And then your automobile gas and insurance. So when you're thinking about your vehicle, is it business, personal, or both? Both, right? And by the way, the IRS actually wants to know what percentage of the vehicle did you use for business versus personal. And you can only write off that percentage, right? So we're going to talk about some ways to track that, but that's an expense that covers both. Business cards, those are a business expense, right? Cell phone, that's both. Unless you're using it 100% for business, that falls into both business and personal. So again, this might look like a percentage of your cell phone bill is a tax deduction or exemption, but the other half may be your personal use. Clothing. This is a fun one. And listen, guys, I tried every way possible to talk to my accountant about what I could do with my clothing budget. I was like, yeah, but I got to dress professional. I need new shoes. Like, I can't just go showing up looking like a slob. And he was like, it's not a specific uniform. My husband's a letter carrier, works for the U.S. Postal Service. He goes, Jed's uniform is an exact uniform he has to wear. That is a business. That's a tax write-off. Your shoes are not. I don't care what you're wearing them for or what you need. It's not an expense. So that's a personal expense, unfortunately. Your computer could be both, right? Although some might argue they only use their computer for business, right? So if you had a separate computer at your house that you only used for personal and you bought a new laptop and you only used it for business, that could very much be a taxable situation. Groceries, business or personal. Those are going to be personal, right? Your groceries are personal. If you buy something specific for your office, for example, or you buy food for an event that you're doing, that would be a business expense. But again, let's remember the commingling. And I'm just going to remind you, I'm that annoying lady that even this week, like last night, actually, I went through Target and I had to buy some stuff for raffles. I had to buy stuff for the Easter party. And so I literally said, Kate, I'm sorry to be annoying. I have 3 transactions. I have this transaction that's my personal transaction. I have this one that was some stuff I bought for the office that was a different business expense. And I have stuff that I bought for my personal business. So that was another expense, right? But it makes it easier for me versus looking at a receipt and being like, I don't remember what I bought here. Again, it all comes out of my business account. I know it's there. Health insurance is probably both, right? Part of that might be a business, part of it might be a personal expense. Your home mortgage and rent is personal, right? You can't just write off your entire mortgage. But if you have a home office, home utility, those can be both, right? Same thing with meals can be both. A gym membership in a professional organization, that's business. Your NAR membership, your Northern Wasatch Association membership, your MLS membership. I subscribe to Inman News, that's a membership I pay for, right? So as you're thinking about memberships, are you using for business or personal or both? Frankly, my Sam's Club membership is a business expense for the most part, right? So again, I would have to determine what percentage of that I use for business, what I use for personal, or more importantly, what can I justify to the MLS, to the IRS, that how much percentage did I use it for that? Is a membership to the gym business or personal?
Business.
It's personal unless you're Justin and you can. Now, again, remember that with the IRS, they want to know specifically how that is a business expense. If you ever get audited, you better really be able to justify why that's a business expense, not a personal expense. Movies or theater tickets, that's a personal expense. Travel with family reunion is a business expense. Vacation is a personal expense. Unless you get really smart and you just take business trips and you figure out a way to make that happen, then they're business expenses as well.
Stop
And
by the
then-
other KW offices in the area.
Yeah.
And team meeting
If you happen to own a business that you hold annual meetings, that can be held off-site somewhere that you have to go on a business trip. So just as you're walking through these expenses, remember what there are. A couple just quick tips that I'm going to give you for this. So auto deductions, remember, so here's a quick little tip from KWI. January 1st, write down your odometer reading. Write down how many miles you're at on January 1st. December 31st, you write it down again. Throughout the year, you're going to keep a log of miles driven for business. Again, I'm just trying to tell you some things that my accountant has shared with me. I am not an accountant or a tax professional. I've just been a self-employed person even before I was in real estate. So I've been self-employed over half my life. If you get audited, the IRS wants to see your logs. They want to know, how are you keeping track of this, right? So throughout the year, keep a log of your miles driven. At the end of the year, you're going to have 2 numbers. You're going to have your total miles driven because you have your odometer, start and end. You're going to have the amount of time that you drove for business. So you're going to have that mileage. You're going to subtract that. So for example, Mary drove 20,000 miles, 15,000 of it was for business. She used her car 75% of the time for business and 25% of the time for personal use. So therefore she can deduct 75% of her auto expenses. I think a lot of people think that they can deduct 100%. You just got to be really cautious in what you're doing. There's a lot of apps to track this, or as simple as having a piece of paper in your car, but I think logs are the easiest way to go. With the home office, it's going to be a little bit similar. So you're going to have what percentage of the time or what amount of the home is being used for a home office, right? So if you have a 2,000 square foot house and 100 square feet of that is your office, you could deduct that, whatever that would work out to be, 5% of your home into the home office. Entertainment and meals. So when you're thinking of entertainment and meals, remember one quick thing here, these are only a 50% deduction. So if you're taking a client to go do something fun and this is an entertainment piece, yes, it is deductible, but only at 50%. So when you travel, don't confuse meals with travel and meals that you take to, or entertainment for a business trip. That is all a business trip and it's at 100% deduction. If you go out to dinner when you're on a business trip and you put it under entertainment and meals, then it's going to only deduct it at 50%, where travel is 100%. So keep that in mind with your business trip.
Can I interject?
Absolutely.
So I'm not a tax attorney, nor am I an accountant. However, there's different rules within everything she says, depending on what you're doing. An example would be your auto deduction. If your vehicle's over a certain amount of weight, it is 100% deductible. Okay, on your entertainments, if you were to buy a gift for your client that happened to be dinner and a movie, that could be 100% deductible. Right? So
Depending
there's-
on where
so
you're
get a
putting
good
it.
accountant, because there's ways around almost everything she's saying to make those percentages differ.
Right, depending on what you're doing.
So what she's saying is the normal before you get creative, if that makes any sense.
And then make sure that you have a checklist. I think you guys all have a checklist that looks like this. This is just some ideas of areas and that you would put these in and that are common deductions that you. By the way, anything that you're unsure of, I just have a list, like a running list that I just send my account and say, hey, what about this? Where does this go? What category should I put this in? So keep that in mind that you can do all those things. And then again, back to travel, you can deduct 100% of travel expenses related to your business, but accurate record keeping is essential. Also, keep in mind with entertainment and meals, again, the IRS likes documentation. So they want to know the clients involved, the business reason, along with the receipts, right? So if Mikhail and I go to lunch and we talk about business, then I would know that Mikhail and I went to lunch and we had a business conversation, and that now becomes a meal that my business could pay for. If Mikhail and I go on a double date with our spouses and we don't talk about business at all, that's not going to be something that I can deduct, right? Does that make sense? So just keep in mind, but just remember, as far as anything taxes go, that IRS just loves documentation. So a quick, like, top of your receipt, you bought something at Target, it was a gift you gave somebody, write it at the top of your receipt who it was. This is just a little, Chris, can you? I need to make sure that the sound's up though, before we start it.
That's the number one reason people have problems with when they get audited is by not having documentation, or if they have to do an extension, it puts them in a higher chance.
Yep, so file on time, we have the recording to make sure it's on volume.
What's this? This is some new bedding. David, didn't I just tell you to save your money? Yeah, I am testing this out for the stores, so work is paying for it. Work is paying for your bedding?
I was gonna leave, but now I don't want.
What is that? Is that a new lamp?
Yeah, I'm thinking of bringing homeware into the stores, so that's a write-off.
That's a write-off?
Yeah.
Do you even know what a write-off is?
Yeah, it's when you buy something for your business and the government pays you back for it.
Oh, and who pays for it?
Nobody. You write it off.
Who writes it off?
I don't know. The write-off people. Why are we having this conversation?
So if I need booze to get through my day, I can just write that off.
That's a stretch.
But the skincare products you got this morning, those are right.
What skincare products? You purchased skincare products?
I am the face of the company. If I have acne, what does that say about the legitimacy of the store?
That's not a write-off. That's not a write-off. That's not a write-off.
Oh, well, the bedding's non-refundable. So
David, a write-off is a business expense used to reduce your taxable income.
okay, well then why isn't it called a tax write-off?
You can just buy things for yourself and write them off.
Well, then I'll return some things. There's not enough space in here for the massage chair anyway.
Just in case any more of your packages are out.
This made me laugh so hard because I actually feel like there are a lot of us that try to do this kind of stuff. And you already told me, I asked my accountant about shoes and clothes. And then one day I was like, honestly, the Botox that I inject into my face should be a tax write-off because my face sometimes tells the story that my clients shouldn't be hearing. So I think that should be a write-off. And he was like, no, that's not it. So anyway, just remember everything you do. I'm just going to reiterate what Mikhail said is that you must be able, like, the government needs to know. He said the people that run into issues when they get audited, a lot of times they are doing extensions constantly, but also it's because they don't have good record keeping. So they're commingling funds, they're not tracking who goes for what or what that was for. You've got to really be able to explain to the IRS why you're doing what you're doing. So keep that.
Can I just plug in the business account was way easier to open than I anticipated.
Guys, it's like, it's so many.
Yeah, you just need to have your LLC and a tax ID number, your EIN. Or if you
EIN,
take
your
your
article
social, if it's a, yeah, but yeah, that's it.
Okay, so before, I think that's it, but I just want you guys to be thinking about at least one action that you're gonna take as a result of what you learned in this class. Okay? And back to Chris Bradford with the most exciting part of the
Rusty warned me ahead of time that her part was gonna be more entertaining than mine. That's probably good. So, I just want to add, if your tax season looks like untangling a ball of yarn, you probably have some changes to make. So, her comments about documentation, record keeping, tracking, everything is one of the most important things you're going to do to make this really work for you. Let's talk a little bit more about a few reporting resources and tools and sort of how we prepare our finances. So this is an interesting thing. I worked in a business for a long time where every year we had to set preseason plans, right? And one of the common things we'd get told back if our plans looked ridiculous was hope is not a plan, right? So we'd get told that a lot. Yeah, hope is not a plan. So exactly, right? So when we set goals, how do we think about it? We've all had a lot of instruction over the years about how to set goals. Give me a couple of philosophies on goal setting.
Smart goals.
Smart goals.
Aim high, higher than you want to hit.
Aim higher than you want to hit.
Actually putting it together on paper. I see it's in, write it down.
Yeah. What's that? Tell someone. Okay. So I love all of these recommendations. So here's the thing about a goal is if your goal is pie in the sky, how fast are you going to give up on that? Pretty fast, right? If your goal is going to make you stretch a little bit, it's attainable. You've got a much more of a likelihood to stay in the game and stay focused on it, right? At Keller Williams, when we submit our goals, we really are submitting goals that we plan to hit. Now, in addition to that, they ask us for what they call a stretch goal. And so we'll often come in and we'll say, oh, and by the way, this is us really, pulling some other rabbits out of the hat, right? But when you're setting your goals, set something that you expect to hit, okay? Base it off of reality, okay? Let's not base it on hope. How do we, what do we call our actuals here? Well, it's what you actually hit. This is as we keep track of our production, our income, whatever it is that we're measuring, this is what we actually do, okay? Couple of really important documents, and we've talked about these a lot. And we're going to spend a little bit of time here focused on a P&L, but two big documents that every business really uses to measure their results on a very consistent basis. You've got a P&L and you've got a balance sheet. Profit and loss. So a profit and loss statement is really a reflection of what you make, what you spend, and your profitability after the fact. Okay, profit and loss, what I make, what I spend, how much is left over, that's my profit. Okay, a balance sheet is a very different document. A balance sheet is a document that essentially says, what are my assets in the business? And then what are my liabilities and my equity in the business? Okay, so a balance sheet is a way of sort of understanding your overall worth. It's a way of understanding what you own and what you owe out to other people, okay? The difference of that being what's yours in the business, okay? Questions on these documents? If you can read a nutrition label or a baseball box score, you can learn to read basic financial statements. Wow, that's different than Albert Einstein's.
One thing I'll say about this, because I do feel like a lot of times I hear business owners that are in this room, I hear you guys say things like, I'm not good with numbers. Oh, the numbers stress me out. I'm not an accountant. You need to understand it. If you can read a nutrition label or a baseball box score, you can understand basic financial statements. And it is actually critical that you do. By the way, back to the taxability piece and what your account turns in. I didn't understand it is not a valid excuse to the IRS.
Right.
If you don't file your taxes appropriately.
Right.
Right? They're not gonna care if you didn't understand. You should understand what's happening in your business. So please make sure that you take this
Yeah.
seriously, and you really just, you need to practice it. Anybody can learn.
Candidly, if you feel like at a point in time, it's like, this just isn't my thing, I really don't fully understand, or I just don't know how to keep up with tracking this and reading this. What you then need is leverage. You need a partner who can do that, right? I'm not talking about your spouse. I'm talking about a professional. I'm talking about people who are qualified to really help you navigate this landscape. What they can do for you is help set up for you a system or an approach, right? It's like, well, maybe you're not the best at all of this, but can you at least track this, this, and this, and feed data to somebody who can put together that information for you? Okay, that's a level of leverage and partnership you need in your business. So let's talk a little bit about the MREA P&L. Now, first of all, what does MREA stand for?
Millionaire real estate agent.
Right, okay, so what I want you to know is when we're talking about MREA information, they're talking about an agent actually at $1 million worth of income. Okay, so these percentages and a lot of these numbers are based on sort of that big ideal out there. Keep in mind that the difference between where some of you are now and what you're showing there is just scale, right? Over time, and a younger agent is going to grow in such a way that they're going to leverage. They're going to start to hire people. They might build a team. It might become something where these percentages are 100% applicable. If you're staying at a lower level of production over time, you may not hit these exact percentages. Okay, so these are guidelines for you. Looking at our P&L, again, remember what I said a P&L was. It's all of your income. In this case, it's residential, commercial, and other income. And then it's minus your expenses, which is a combination of cost of sales and your operating expenses. And then you've got profit down here at the bottom. So it's interesting here. This is where we're first starting to see the difference between cost of sales and operating expenses. And I know we've asked this question 1,000,000 times, but I'm going to ask it again. What is the difference between cost of sales and operating expenses? Jesse.
Cost of sales is only an expense incurred when you do a sale.
Right. Right. Give me an example of that.
Closing gift or some special service that you do during the transaction for all your clients, or commission splits.
Commission splits. Yep.
And I'm gonna just remind you that it depends on when you're buying the clothes. Remember, if you're buying it, like I do mine, I buy everything in the end of the year for the next year. That's a big expense. I bought them whether I closed the deals or not, right? So I'm hoping that I'm gonna close when I got the gifts for, right? But that's that's an expense at that point, because I don't get to expense it for each closing. So just remember.
Sorry, what do you mean? So I'm sorry. Let's say for next year, for this year, you're gonna do 10 transaction, you bought them at the end of the year for the remaining of.
Yeah, so I just buy like I do some other stuff with it, but part of all of my gifts is a Dinky blanket, so I just buy a bunch of them at the end of the year, because usually I'm like, I could use some expenses in this year. So I buy a bunch of them and then I just use them throughout the year. Now they go as a closing gift, but it's not a cost of sale because I paid for that regardless of whether I sold the homes or not.
Close business.
Sometimes I buy too many, sometimes I don't buy enough, right? So that's an expense regardless because I paid for it. Listing photos are something people often get confused and think is a cost of sale. It's not, because you have to pay for it regardless of whether the house sells or not. If you clean if window cleaning is included as part of your service, that's not a cost of sale because you have to pay for it regardless of whether that house sells, right? But if you paid it at close, if you reimburse somebody for it, then that's different. So anything that occurs because a sale happens is a cost of sale. Anything else is an expense.
Really well said, really well said. So something has to actually sell for the cost to actually be a cost of sale, right? So And I love that you brought up the photos, because I was actually gonna just mention that. That's sort of a tricky one. Everybody's like, well, wait, but yeah, you're absolutely right. You have to pay for it, even if the property sells or not, right? So by contrast, operating expenses. Operating expenses are happening no matter what. Right? They're happening no matter what. So some of the examples there, salaries and benefits, lead generation expenses, education and coaching, occupancy, supplies or office expenses, communication and technology, insurance, equipment, furnishings, and there's a long list of things that fall under this expense bucket. Okay. The difference, again, you've got your income, you're going to back out your cost of sales, your operating expenses, and you're going to end up with profitability. Okay. We had a big conversation about this last week, about this 40% profit, right? As a service industry, we've got some of the higher profit margins really across many different types of occupations. Okay. Let's do a little study here on a sample P&L. Okay. So here we go. Let's look at this. We've got.
This is really actually is.
I know.
He was like, no, mine is more fun.
Okay, so here's a really great example of a P&L. Steph is somebody I know who actually has a P&L and uses it, right?
Girl.
Right, and so in Steph's P&L, right, she has a lot of these different buckets broken out. So you have residential income, right? You can actually see yours as listing, buying, and referral income, okay? So we can even break these out a little bit further. If somebody's doing commercial income or other income, you can see sort of how you might break that down in terms of how you're recording it. Keep in mind that a budget is the front end of this. So before we go into the year, we've probably tried to make some assumptions about how much we're going to do in these different buckets as well. In this case, they budgeted $275,000 worth of income and $270,000 worth was actualized. What do you guys think?
Pretty good, yeah.
Not bad, right? Not bad. Yeah, that's pretty solid. Okay. Their cost of sales here, they put just a total number in of $82,500. The actual cost of sales was just came under that commissions paid out bucket was $60,000. Okay. What do you think? How do you feel about their diligence in assessing their cost of sales budget?
Pretty reasonable.
Reasonable? Would you say that it's where it should be? There's not a right answer, right? There's not a right answer. When we put a budget out there, this is what we believe. It's based on the best information we have at any given point in time. If you've got any history that says, really, my cost of sales is just my commissions paid out, commissions should not be that tough to figure out. Or your split, sorry, yeah. Should not be that tough for you to figure out when you're putting a budget together, right? You should be able to get pretty close on that. The difference there, you've got a gross profit number. So they budgeted $190,500 in gross profit, actualized 210. Well, that's going to feel good, right? That's going to feel pretty good. So let's look at some of their operating expenses. They budgeted $82,100 in operating expenses and actualized $119,660. How do we feel about that? Anybody sort of go?
Yeah, and I was like, where'd that go?
Yeah.
Jen.
It went to lead gen, but notice they didn't get it. They had only budgeted 6,000. They didn't get it because return on their lead gen number.
Exactly.
Right? Because their actual income was less than what they had budgeted for.
I want to know.
But that is a realistic thing. Frankly, I think a lot of us underspend on lead gen. Frankly, I think a lot of us are scared to spend money on lead gen. We underspend.
How do we get into this situation? How do we get into a situation where we're overspending?
Not red light, green light, your budget and your P&L every month.
Yeah. So if you're looking at this every month or more, right? If you're watching your budget, if you're assessing your expenses and actually saying, okay, is this part of what I plan to do? It's less likely that you're going to get into this scenario. What this looks like to me is that this person made a decision at some point and said, my lead generation bucket of $6,000 is not realistic. I've got to step my game up if I want to produce, right? So I'm going to step way outside of my budget and I'm gonna go and pay somebody big money to generate leads for me. Right? Have we ever done that as an office?
Right?
Right?
But we're looking at it monthly. So like, for example, Chris and I had a conversation just yesterday
Yep.
about an expense that we're looking at that is, I think it's a really necessary expense. It's gonna be a huge benefit to our agents. But yet it wasn't part of our initial budget. So do we just go spend the money and we'll figure it out at the end of the year? No, we have to go, where does this come from? What bucket are we gonna adjust? Where can we, like, if this person made a decision that they weren't spending enough on lead generation to not end up $40,000 above what they were expecting, they should have looked through, and maybe the answer was, I just didn't budget well. I didn't budget enough, so now I have to, like, I'm just gonna have to figure it out, right? Maybe that is the answer, but the answer might have fallen into here where they could look and go, I didn't budget enough for that, but you know what? Maybe I budgeted too much for salaries and benefits, and maybe now with this lead gen piece, I've gotta pay less for whatever else I have, right? So it's making these decisions, but if you're not looking at it until the end of the year, or even worse, you're not looking at it till you've already extended your taxes. And now it's September 1st of the next year, and you're like, I gotta file these in 15 days on my extension. And now you're trying to look and see where you spent your money. That's not a good time to readjust your budget. But if you're paying attention every month, you can look at that and go, you know what? I know I overspent this month, but next month I'm gonna spend less in lead generation because this month I'm doing a big event, so it's costing me more money, right?
So we have documents that we look at the end of every single month that has very, very detailed information. It literally uses the Keller Williams chart of accounts. And you can go through literally line by line and you can see, this is what I budgeted, this is what I've spent. And so we can talk intelligently at the end of every month and say, you know what, we underspent here, we overspent here, or we need to make this plan moving forward. Here's the results. I know where I sit year to date on my spending. I can make that intelligent choice,
Yep.
right?
And by the way, if you're budgeting for things like travel, for example, if you've decided you're gonna go to mega camp, you can start putting a little bit in a bucket for that right now, so that every month you're expensing it instead of having a huge expense when you go to pay for everything in June or July, right? Like right now, you could start going, I'm gonna put $1,000 out of every check into a little savings account that now becomes that piece that I'm gonna, so I kind of save for it all year long. It doesn't change the expense, it just makes it a little easier to stuff.
Okay, we're gonna do a really quick case study. I'm gonna move through this pretty quick because it's gonna be similar to what we just did. So this is Annie's P&L. Okay, just real quick, if we die by 4 this afternoon, we got all the money we need, right? We're in pretty good shape. Okay, again, hope is not a plan. Okay, so here's Annie's P&L. You can see what her income was, $260,000. Commercial income was $10,000. So total was $270,000. Her cost of sales was $60,000. So she actually had a gross profit of $210,000. Okay, here's a whole bunch of Annie's expenses. And when we, what's that?
Just broken down a little.
Yeah, so when we were talking about those expense buckets, we were only hitting on a few, but now you can see it's like, oh, wait, yeah. Look at all these different layers of expenses and ways that I can keep track and manage. All of this is to help you make better decisions. It's not because somebody wants to make you do math, right? It's not to punish you. Okay. This is meant as a resource to provide you with information. Okay, more expenses that you can see here. Office supplies, communication and technology, all broken out with telephone services, internet, website, all of this information. Okay, her business profit ended up being $89,440. Now, I want to just talk for just a second about some of the questions around her budget. Let me get this to the right page. Okay, so I'm gonna back up a little bit. Okay, so one of the first questions here, how does Annie's cost of sales compare to the MREA guidelines? And how would you advise her? So let's look at that. Her cost of sales total was $60,000. on $270,000 worth of income. That was 22%. Our MREA guidelines show how much, Russie? 30%, right? So how do you think she did relative to that?
It's good.
She did pretty good, right? Does it mean that that's right, wrong, or otherwise? Well, only she knows by actually understanding how this breaks out. But she's within range on that.
And one thing I just want to point out here is she had buyer cost to sell. So most likely Annie is working with like a buyer's agent, right? Or she maybe plans that into her budget every year to say, hey, I know that there's at least 2 or 3 buyers that I'm going to be working with an agent on, that I'm going to pay them a percentage of my commission, right? So that's a cost of sale. Again, that agent isn't getting paid. They're not on salary. It's just if something closes. So when you're looking at this, I think a lot of times in our brains, especially like, I'm going to guess Annie's probably an individual agent. 275,000 is not out of the realm for her to be an individual agent. She's probably an individual agent. She made a decision somewhere along the way to spend money used to doing this with leverage, right?
Yep.
Now, I think a lot of times we just instantly think of cost of sale as just what our cap is, right? So we go, well, it's 18,000, and then we've got some E&O, and then, you know, maybe I've got a few other things. I pay a TC. I've got a couple other things that are cost of sale, but we don't ever really think about, like, is there additional cost of sale? If you are paying a buyer's agent to go, or a showing agent to go help with things. So it's just, again, she's within the realm, but as an individual agent, I actually personally think, and you guys have heard me say this during our business planning clinic, I think the 30-30-40 is a little high on the cost of sale and expenses for an individual agent that really falls more into a team structure, right? So like Mikkel operates mainly as an individual agent. His cost of sale is going to maybe look a little different than this, but it's probably not just going to be the cap and the E&O, right? There's still going to be some pieces that he budgets for in there. But just as you're thinking through your own business, think about that. Think of it in that way, that you, even as an individual agent, even if you don't have a full-time buyer's agent, you might pay for showings sometimes. You might have an agent that you're like, hey, do you want to partner with me on this? Because I know I'm out of town for a big piece of that chunk, and it's going to require a lot of extra effort. So I'll pay you to help, right? Whatever that looks like, just keep that in mind.
The
So,
rookie real estate agent says 20% cost of sale and 20% business.
Yeah,
Yeah.
and I think that's more in line for an individual.
exactly. Yeah.
And I think one of the things we see, like what you were saying, is agents don't want to spend any money on lead generation. Like, and in the beginning, that's fine, you gotta hustle hard, but then when you're building multiplication, you gotta spend some money. Yep.
So Kaylee, I'm gonna just call you out a little bit. Kaylee is one who I also know has a P&L. Sorry, not call you out, but use you an example. Kaylee is
Maybe
someone.
change the habit of calling out.
And good call out.
And Kaylee brought up a really cool idea towards the end of last year, as we were talking about she and I working together to manage some of her finances. And one of the things that she wanted was she wanted to know exactly what she spent per transaction. So we went and we built out a way that as we're looking at all of her expenses, we can actually assign those to individual transactions. So now she knows what her exact expenses are on a per transaction basis. How powerful is that for Kaylee in understanding her costs associated with the transaction?
Is that going to make your budgeting for next year easier or harder that you know that?
Easier.
Way easier, right? Because if she knows it costs her X amount of dollars per transaction and she's budgeting to do 50 transactions or 100 or whatever it is, she can now take that cost times that, and she's going to have a really clear picture of what her budget should. Love it.
Okay. All right, we took a look at all of these expenses. We're just gonna sort of go down to the bottom here. And we're gonna ask a similar question about her expenses. Okay, compared to the MREA, which is how much again?
30%.
30%, which again, we're saying may or may not be right, depending on how your business is modeled. How do you think that she did with her expenses?
Hi.
A little bit rough, right?
Because this is high even for like the estimated model. Now, by the way, there's a lot of people that are way beyond their expense of 40%. Like we tend to get, us salespeople tend to get fooled sometimes, right? So we spend money on things that we maybe don't need to from an expense standpoint.
What's the percentage in the MREA for profitability again? 40%, right? So did she meet or not meet her goal? Just based on the MREA numbers, right? Now, if her budget looked exactly like this before she started the year, and these were her results, what would we be saying right now? educated, knows how she needs to spend money to be successful in her business, has things well planned out, documented it, tracked it, and basically hit her numbers. Right?
Theoretically, there may be years that you make that decision, that you go, this year, I know it's good, I know I need to buy a laptop this year, I know I need to buy a car this year. I know that I'm gonna spend more money on lead generation. Maybe you're farming an area. Allison, how long does it take for a farm to start to pay off? 12 to 18 months. Are you gonna spend money on that farm in a year that you don't realize any, Mikhail's like, oh yeah, that you don't realize any profit, right? So this could have been a valid business decision she made to say, I'm gonna be out of whack with my expenses this year intentionally because I'm building something. That may be where she went way high on her lead gen, right? She may have decided to pick up a farm and really pour into that farm and spend some money on it. That's not gonna start showing up for several years.
Buy a trailer.
Or you buy a trailer one year or whatever. So again, as long as you're making like knowledgeable decisions, then that's okay for that to look like that. But what we don't want you to do is get to the end of the year and go, I spent 60, because there's people that 60, I spent 60% on expenses. And that's not even cost to sell, you know, and now your profit margins are getting down to 10 and 20%. By the way, this is why Gary started making anyone who gets on stage at family reunion or mega camp, they have to give him a P&L and a balance sheet. Why? Because there was a lot of huge teams that were touting these great numbers and they were not making any money. They were like 10% margins. So that's why he was like, yeah, to get on the stage and talk to people about what you're doing, you're going to show us your P&L and you're going to be able to prove that you're a profitable company.
I've shared this before in this room. One of the craziest conversations I've had since working here was very early on when an agent came to me and said, did I really make this much money when they got their 1099? And I said, yeah. And I showed them exactly how they had made that much money. And they'd made well into the $300,000 worth of commissions. Okay. And the next sentence out of this agent's mouth was, I have no idea where that money is. And I could not believe it. I
They
could
lived
not.
their best life for a year.
Yeah. So the significance of this, right, starts to even get bigger as the numbers start to grow, as you start to leverage your business, as you get your scope grows, right? It's pretty easy to maintain a little budget like this without paying a whole lot of attention. And I'm not saying don't pay attention, but when things start to grow exponentially, which they do when your business gets up and rolling, there's no excuse to not do this. Let's talk a little bit about budgeting. So in life, we have our personal budgets. Hopefully, we have our own personal lives, needs, how we spend, how we earn, whatever. That's just all on a personal side, detached from what we're doing in our business. And we've got our business budget. Do you know that as we build our business budget, remember I mentioned that chart of accounts and those individual lines, we literally build a budget based on every single line. And not only that, we review it. Like Rusty and I go through it in detail. And every number, we sit there and we go, now, how do we justify this number?
Is this giving us the return?
Yeah. This number makes sense because we're going to spend here or we're going to cut here. It makes sense because we're adding this or we're cutting that, right? We literally go through every line. There's probably 100 lines that we looked at, right? In detail, with detailed conversation and detailed notes. I'm just going to move sort of quick through this. Here's an example of what this might look like as you're building a budget out. You might have a bucket like lead generation. Break those out into different sub buckets, if you will, so that you can come up with exactly what your expense was, right? There's not too finite of a way to build your budget. Okay. In fact, the deeper you go, the easier it is to sort of roll it up and make sure that it makes sense.
You're going to build a detailed budget on your own time. You do have an example in your packet.
Okay. Couple of concepts. I love that somebody, I think it was Jesse, mentioned red light, green light. Tell us about that.
So when your budget is getting into the red, you stop spending money. When your budget is getting into the green, it's okay, I have some room to spend some money.
Okay. As you're looking at all of your expenses, green typically means go, red typically means or stop, right? So as you're looking at all of your different expenses, is this a go or is this a cut?
If you haven't done this recently, print out all, everywhere that you're spending money, print it out, start with 3 highlighters, a green highlighter, a pink highlighter, an orange highlighter. Orange is like, get rid of it or you're watching it, it's gonna maybe get cut. Pink is like, well, this is my own personal. So I'm not getting rid of this because I wanna have it. And the green is like, yes, this is making me money, but know where your money is going. And is it getting a red light? Is it getting a red light? Like this is not giving us the return, stop spending it. Stop spending the money that you're not getting a return on.
The other concept, just real quick, that I'm gonna touch on, lead with revenue. So can you just cut your way to profitability?
No.
Like what happens, right? At a point in time, you stop doing anything, right? So lead with revenue. So the leading idea behind how you build your budget and how you actually track against it is that you're making money and you're doing activities that are driving that number, right? We have this conversation all the time. In fact, I think there were a few years that Rusty and I would both confess that we probably were trying to cut our way to some profitability on a few things,
You
right?
can't out expense your profit.
Right.
You're not kind of playing defense. You gotta leave with right.
Real quick, this is the kind of thing you will see for building a budget, right? It's got a lot of different categories broken out. There's no rules on this in terms of what categories you can put in there. You can add, subtract. So this is, if you got access to the student guide, you should see this document in there as a resource for you. A couple of tracking resources. So we've talked about the P&L, right? If anybody wants to talk about P&Ls, I would love to have that conversation with you. Come find me. Let's sit and let's talk about it. I've got access to different resources and different tools that we can definitely help you with. Okay. We've got agents this year that are starting to actually partner with me and are like, okay, yeah, let's actually make a thing out of this, track it, talk about it, stay on top of it. And at the end of the year, the idea is we print a piece of paper out for them and they go to their CPA, right?
It was so
Really beautiful, really beautiful. The agent trend report, who knows what the agent trend report is? Yeah, so within command and reports, you have access to what's called the multi-year trend report. It's changed a little bit, doesn't look quite like this anymore, but the idea behind a multi-year trend report is it's going to capture all of the years of your production with Keller Williams and just show you literally every single number that you can think of.
And by the way, if you haven't been with Keller Williams your whole career, I have a tool now that I can pull your production.
Right.
Really since you began. So if you are curious just to see what your trends look like, you can pull all of those, but anything that closes with Keller Williams, we're trending it for you.
Okay, Rusty, here, I'm gonna hand this to you.
Okay, we're gonna talk really quickly. So, does anybody have an action that they're gonna take before we talk about the future really quick? Has this been helpful information?
Yes.
Because we're gonna talk about the future, but guys, the reason we're talking about it so much and the reason why this started is this is the first step in the wealth building journey is because you have to have a profitable business to be able to fuel the life that you want to have. So we're going to talk a little bit about like your financial health or your overall minding your future and the health of what that looks like. And the reason we're talking so much about budgeting is because this is an area that we see a lot of people just really live in the entrepreneurial world. And they don't really track their finances. They don't know how profitable they are or could be. And they spend money willy-nilly and then they wonder why they're not getting further ahead every year, right? So just, I know it can sometimes feel, we try to make it fun. It can feel a little like, ugh, to you, but it's such an important part of being a business owner. And I think that's one of the key things that separates the people with longevity in the business that really own their business and are able to go to the next levels and be investors and start planning for the future and the retirement for the people that pay attention to their business. So it's really important.
Can I add something just real quick? So every morning when I get here, the very first thing I do is I reconcile every single account that we own. And I do it every single day. Okay. So you would think if I was reconciling every account every single day, chances of having what is this kind of a moment would be pretty rare. And it is, in fairness, right? That habit keeps me way out of trouble. This morning I got in and was reconciling an account and I'm literally just scratching my head in terms of what happened. Cannot for the life of me figure out how in the world a certain thing happened within this account. And what I'm finding now is that there's a glitch, right? The reason I share this with you is how many days go by and how many little glitches accumulate. And now I'm a week down or I'm a month down, and I do know people in my position who reconcile their accounts at the end of the month, which I cannot even imagine doing, right? It would be an absolute hellish day to do that. But how many little glitches or little things that you can't remember accumulate? And to the point where now you're finally looking and it's like, I have absolutely no idea what's going on here. And you can't untangle it. Sometimes you just literally can't untangle it. So that consistency, that dedication every day, I tell my sons all the time, 5 minutes a day with your finances will like change your life. So,
Makes you really aware of what you're doing.
yep.
It makes it easier to figure out, like, what was this expense for? Like, what was this? Was I charged appropriately or was I not? If it's 6 months down the road before you catch that, or 12 months, it's a lot harder to untangle, like Chris said. So speaking of health, this is about, we've been talking a lot about financial health, right? But they all play together. Spiritual health, your physical health, your personal life, your key relationships, your job and your business, that all incorporates into a whole life. So when you're thinking of physical health, for example, because all of these intertwine with each other. So when you're thinking of physical health, I just want you to think of any of the stressors that could affect your physical health. Being on the go all the time with no time to relax, eat, or exercise. Some of us fall into that trap sometimes. Does that affect our physical health too? Eating fast food instead of healthy food, spending long hours in our car, dealing with emotions of stressed out clients, difficulty balancing family with work, having to look great at all times, safety concerns during meetings, open houses or showings, concerns about closings and paying bills. Are all of those things that are our business, right? When we're looking at the whole life, those are probably our business health or our job that's affecting that, but it's affecting our physical life, our physical health too, right? If we're stressed out, we're not spending any time with our family, does that affect our key relationship? Right? So all of these things work together. If you are stressed out, finances, I think, are the biggest stressor in any relationship, including the relationship with yourself. If you are stressed out about finances, it causes a lot of these other things to just start to fall apart. So it's really important to look at your whole health. So a couple just quick things. Oscar Wilde said, when I was young, I used to think the money was the most important thing in life. Now that I'm old, I know it is. And you guys have heard me say, I'm a firm believer money does not buy happiness, but money can make happiness easier. And it doesn't have to be large amounts. There are a lot of people that make very small amounts of money, but live very happy lives, but it's because they're really aware of how they're spending money and what they're doing with their budgets, okay? So just keep that in mind. A couple quick things to build your future now. Have a savings plan. Save for a rainy day. You guys, what happens if you become incapacitated and can't run your business? If you are the sole provider and you have your business that you're running and you become incapacitated, what happens? Do you have any savings for that? What if you can't work for a while? What if you can't drive? What if you have a disaster that happens and you need to be able to live for a while, right? I think about this every time we have Keller Williams offices that are in areas that are flooding or huge disasters are happening. I think, man, what are those agents doing that have not saved for a rainy day? Do you think that those people in North Carolina were out holding open houses when the streets were washing houses away? They were not able to work for a while, right? There's still probably people who are still rebuilding. So thinking about those things, profit share is another piece of building your future. You're here at a company that profit shares. So if you know agents that you want to bring to Keller Williams, talk to us about them. Building your future includes investments. Can you make investments if you're not a good steward of your business income now? You cannot. You have to be a good steward of your money to be able to make investments. Building a team is another way to build your future. So we're going to take some action. We have, again, I'm just going to shamelessly ask you to please do a review for me. I'm on the path. Allison and I are going to be doing this throughout all the rest of our classes. Certain classes we can get reviews for. We are on the path to it becoming a KWU certified instructor. We have to have at least 100 reviews. So if you don't mind taking a minute, the event is going to be not hybrid. It should say in person. I am not an instructor, so you're going to scroll to the very bottom because I'm not certified yet. It's going to say instructor not in the list, and the course Agent Financials Part 2 should be in there, or at least just Agent Financials. So it'll say instructor not in drop down, and then it will ask you to type in. Okay. We have. I am hoping that you gained some good. Do I have any quick ahas before we introduce our sponsor today? No ahas? Justin.
just that savings for a rainy day. I had a TBI a while ago.
Yeah.
And had I not had any money, or had, I mean, there was a point where I was like, hey, what am I gonna do? I have to live in this basement and stuff. And just scary that overnight things just change.
Everything can change kind of in an instant, so we don't have something saved. And your comfort level, like whatever your comfort level is, for some people, that might be 6 months worth of your living expenses, like it might be 12 months for you to feel comfortable, whatever it is, start working towards that. And by the way, I know this can sound overwhelming. If you're starting, if you're a brand new agent, this, you probably are like, whoa, this feels hard. It just takes one little tiny step. So it might just be, you know what, out of your first couple checks, you're gonna put a couple $100 into it. You just don't even look at that. Forget you even have it. You can start small, but you have to start somewhere, and I promise it will grow and the momentum will gain. But if you just keep sticking your head in the sand and spending everything that you make and not paying attention to this, the problem gets bigger. It doesn't get smaller. So if you just start making little steps, I promise it'll get easier, but you gotta start somewhere. So
And please, if you're sitting there and you're like, I have no idea what they were
Like,
just
reach out
talking
to
about
us.
in this, like, just come sit in our office and let's talk.
Yeah.
Like, we'd love to help with any version of answering these questions and working through these disciplines.
absolutely. So Melissa with Guardian Home Warranty is here today. Hi, Melissa. I love your positive way. That's awesome.
So I know everyone wants food, so I'm gonna lead with, I brought rum beef.
Yay.
Not just sandwiches, there's macaroni, salad, 2 trays of it, white rice, and then there's chicken and steak. And then the sauce is there's plates, and I put some cookies on it. So, so when you get out there, you know what you're getting. So hopefully you've heard of Guardian Home Warranty. If you haven't, it's a home warranty. Everyone in this room knows what a home warranty is, so I'm not gonna go into the like, this is what a home warranty is. We are only $600 for up to 5,000 square feet, and it's only $70 for a call out. So we're really well priced. Other than that, it's a basic home warranty. Like, we cover all the basics. If you have a normal house, we cover it all. If you have 2 kitchens, it's an add-on. If you have, someone had like 8 air conditioners. Oh, they were running a mining thing on the internet.
I was like, sure. They have.
Oh, no, they're not. Oh, yeah, I don't know. But like, we, you know, it's still covered. We just, there's an add-on. So other than that, I left a bunch of my brochures on the counter. I would love if you look at them and at least just give us a chance, give us a look. And if any of you have any events, if you want to let us know, either you can email us there or email, it's very easy. It's just marketing@Guardian Home Warranty. We love sponsoring your guys' events if there's anything we can do to help. So that's it. Go eat.
I'm gonna be here for a minute if anyone does have individual questions. Melissa, will you be here for a minute if anyone does have individual questions? Okay, so she's gonna hang out here with us. Thank you guys for hanging in with us. Happy birthday, Allison. Don't forget to give Bradley some well wishes and some date night ideas. We're super excited for him. And have a great day.